Well, Joel Gibson is the campaign director of One Big Switch. Now, they've worked with electricity before, and now they're looking at the costs of health funds. Now, since 2010, the costs of your private health insurance have gone up by 35%. It seems like quite a lot. Joel Gibson joins us now. Joel, 35% seems way above inflation.
It certainly is, Ian. In fact, it's 75% over 10 years, which is 2.5 times inflation over the same period. And that's why people aren't imagining it. These health insurance bills are really starting to, they're like a raging bull through the family budget, just laying waste to our very tight budgets.
So what is your plan to try and beat the cost of health funds?
Well, Ian, what we do is we run people power campaigns. We ask people to come and register their interest, to say that they really want a better deal, a better offer than what's out there on the market at the moment. And if we can get tens of thousands of households to do that at onebigswitch.com, to join up, lend their people power to the campaign, then we can go round to the funds and ask them what's the best offer they can make and effectively stage a sort of Dutch auction. And we test the market, basically. It's a bold experiment. And hopefully at the end of that process, we've got a winning offer to give back to all those people who've joined up.
And how do you make any money out of this? Is this just altruism?
No, it's not entirely altruism, Ian. We are a business. We make no bones about that. And we think it makes us better at what we do because we deal with businesses on a daily basis. We know what motivates them. And effectively, if we can get an offer that's good enough for you to switch to, and you switch to that offer, then we will get a commission.
Right. So that's why you need tens of thousands of people, and you take a small percentage out of those tens of thousands of premiums, but then you're saying to the health funds, give us a better deal than you're offering. So let's just say, pick a company that's been in the news lately, Medibank Private, which is, you could go to them and say, look, now you're listed on the stock exchange, how would you like to give us a better deal?
That's right. I mean, they're all looking for to grow their market share. There's a number of different ways they can do that. We offer them a new way. Effectively, we offer them a potential customer pool of, let's say, 40,000 new customers, and they then have to convince people to switch with a good offer. But it's a very attractive proposition to some of these health funds if we can build that group big enough.
That's it's going to be interesting to see what happens then. In the past, how quickly can you get together tens of thousands of households?
It takes generally it takes sort of 3, 4, 5 weeks to get to a group that size in. It does take time. It's a campaign, so it's a lot of hard work. But this is the first day today. We've had a couple of thousand sign up already this morning, and we hope that by the time we get to that end of that 3 or 4 week process, we've got a big enough group that it just makes it irresistible for health funds, and that enough of them are prepared to make an offer that we get a bit of competition in the process, and that there's a win that's very attractive to a lot of the people who've joined up.
Could you get them to knock off that amount, do you think, the 6.2%?
We certainly hope so. I mean, that's our goal. If we can eliminate or offset that price increase for people who've joined, then that's definitely a victory. But some people can save more than $1,000 by switching health insurance just by shopping around because they're on overpriced plans and they don't realise it.
All right, look, we spoke to Tom Godfrey from Choice a short while ago. We'll go to him now, Joel, and just hear what he had to say. I began by asking him if there were any other alternatives to joining a campaign like yours.
Look, there are a number of things you can do, and I think the first among them is to see if you have the capacity to pay up front, because if you pay your premium before the 31st of March, you can obviously avoid the 6.2% increase. A number of the funds as well will also give you an additional 4% off for prepaying annually and also for paying by direct debit. So there are savings available. But look, any way you cut it, these price hikes are really significant. We've seen prices go up 35% since 2010. So it is a lot of money. And I think it's a good time to sit back and ask yourself, why do I have private health insurance? What do I actually get it for? Is it just for tax? Do I have it there for emergencies? Am I using the extras cover optical and dental during the year? Because working out what type of health insurance cover you need might just allow you to either pull back on one of them or change your policy to get you better value.
It seems that more and more Australians are taking private health insurance. the private healthcare group, Private Healthcare Australia's chief executive, Michael Armitage, said more than 13 million Australians have got private health now. So that's the vast bulk of the population.
Yeah, look, and a lot of people do have it, and I think you can make it work for you. Our research has shown that a top cover policy with an excess is probably the best way to go. But again, it just depends on what life stage you're at. I think the other thing to ask yourself is whether or not you're eligible for a restricted or membership-based fund, because they often offer great deals for members. And I think, one thing to bear in mind when a lot of hype comes on these switching services and mobilising consumers to change to an individual fund, but the fact is health insurance is not a one-size-fits-all. It depends on how old you are, what life stage you're at, and the type of cover that you might need in the next 12 months. So, look, it can be quite complicated, but I think that the most important thing is that you assess the cover that you're on now, because for a lot of people, it's a huge amount of money each year.
So are you suggesting that you could, for example, be on the wrong cover now because when you joined, say, 15 years ago, that was right because you were I suppose, having children or whatever, and now you're older and your children have grown up, you should change your fund. Is that how it works?
There's no doubt about that. It's good each year, every time these price rises come through, is to actually stand back and look to see what cover you have. Younger consumers often take out private health insurance for a tax advantage, but as you get older, you get a family, then look, you may well come to call and on that policy. And really what you need when you're claiming a lot is a top cover policy with an excess. And I think, it's a timely reminder as these price rises go through that health insurance is not a one-size-fits-all. You need to work out what you're going to be using it for in the next 12 months. The other thing to bear in mind is if it's an emergency and something really does go wrong, the public system is very good and you're going to be covered anyway. So I think you need to stand back, ask yourself, are you getting best value for money? Are you in the right policy? And don't be afraid to make a change, but I think you need to do it in a calm, considered way and make sure that you're getting a policy that's right for you and your family. I'm
talking to Tom Godfrey, spokesperson for Choice. Now, Tom Godfrey, we've seen a number of organisations. There might be trade unions, they might be the RAA or someone like that, a motoring organisation, offering these special discounts for members. I mean, is it any different what we're seeing with this new offering that's out there now, where they say if you can get 40,000 members, we can negotiate a better deal?
I think, again, a lot of the restricted membership funds based on profession, be it defence or otherwise, can be quite good, but you're not getting a one-size-fits-all. You're getting a program through that fund that's tailored to your needs. And I think, what you need to do is, by all means, look at the collective switching program to see if it's right for you, but don't just assume that it will be. I think you need to make an informed decision about the health cover you need, because when it comes time to claim, you want to make sure that you're not going to be even more out of pocket than you already would be. I think the other thing we've found as well is that a lot of consumers don't realise there are two types of private health insurance cover. There's hospital cover and extras cover. And our research has shown that obviously hospital cover can be a good thing if you're planning a hospital visit in the next 12 months. But look, you need to consider your extras cover and work out whether or not it's the right cover for you, because a lot of the payouts on the dental and the optical services are pretty low. And there's a comparison on the Choice website, choice.com.au, where you can go and look to see historically what the payout rates have been, because you'll often find that it might be better, instead of taking extras cover out, another option would be to put some money aside in a savings account. And, you'll often find that putting that money aside each month, as opposed to paying the premium, ends up being more cost effective. Finally,
Tom Godfrey from Choice, if you're seeing premiums go up, as you said before, by 35% since 2010, and we constantly hear that the health system is costing us more and more, will it get to a point where people will just say, look, I'll opt out because it's getting too expensive?
Yeah, and I think that would be concerning, because private health does work for a lot of people. But look, there's no doubt about it. Our consumer pulse each quarter puts health and medical costs as one of the top consumer concerns. People are feeling the pinch, and we've seen these successive rises in private health cover. Unfortunately, I think a lot of consumers are starting to be priced out of the market. So it is worrying, and I think anything we can do as consumers to take some of those cost pressures off us and find ways to alleviate some of that premium pain is probably a pretty good thing to do.
All right, thank you very much for your time this morning, Tom Godfrey.
Thank you.
Tom Godfrey from Choice there. And by the way, that detailed information from Choice does cost. If you get on their website, you have to pay for some of that. Joel Gibson is the campaign director of One Big Switch. He's a guest on the morning program. In a moment, we're going to talk to Dr. Stephen Duckett, the former Secretary of the Health Department, now with the Grattan Institute. Some of our listeners have got some questions for you, Joel. Did the One Big Switch work for electricity, asks Stella.
We've done a number of electricity campaigns over the years, Ian, and we've found that it's a very effective model with electricity. We haven't always been able to get an offer in South Australia, interestingly. We find that's the toughest market in the country when it comes to getting, real market-beating offers in electricity.
Okay.
But certainly most of the time and on a number of occasions in South Australia and elsewhere, we've worked. As I said, these campaigns are experimental. You never really know what the result will be until you have a go.
Okay, what about this business that we heard there from Tom Godfrey of paying your premium before the increase comes in on the 1st of April? You actually pay up now and you avoid the 6% increase. If you wait and go with your deal, you might as well just go and pay the premium first and then try and get your deal later. Wouldn't that be right?
Possibly. It depends when our winning offer is ready, I suppose. It may be that we have a winning offer before April 1st. And
okay.
So we've been telling our members to think of April 1st in their head as the sort of deadline for their shopping around expedition. And if you can afford to pay your annual premium in advance, then fantastic, because you can avoid that.
Increase.
Yeah.
All right. Well, look, Joel, we're going to talk to Stephen Duckett now. Stay on the line. Stephen Duckett's the former Secretary of the Health Department, now Health Program Director at the Grattan Institute. Dr. Stephen Duckett, these increases, which we've heard from Tom Godfrey and Joel Gibson, are just going up and up and up and up. I mean, do they ever level out?
Not in the recent times. And there are two reasons why they're going up. One is people are using health services more. Another is that the cost of health services is going up. So the combination of those two means that the premiums go up.
Is it also a factor that we're now seeing, as Michael Armitage said, 13 million Australians in private health? Does that mean that the private health system is actually more expensive? It's a bit like the private schools or whatever. More and more people are using them, and therefore they actually can charge more. The doctors can charge more in those hospitals.
Yeah, well, it's partly the 13 million figure is for people with extras cover.
Right.
The hospital cover is about 11 million or so. The proportion of the population that has hospital cover has been inching up over the years. It's now at about 47% of the population, up from about 45, 46% a few years ago. So it's increasing, pretty slowly, but it is increasing.
But does that mean that is also pushing up the cost of the health system? Because Michael Armitage also, who we wanted to join us this morning, wasn't available, but he's given us the information. He says 58% of surgical procedures are carried out in private hospitals. Now, they're fairly expensive processes. So if you can get a job done at a lower cost in a public hospital than in a private hospital, isn't that also going to be pushing up the cost?
Well, as I said, there are more operations being done, there are more treatments being provided, and they're actually expensive, and the costs of them are going up. So the combination is forcing the premiums up.
Right. Well, then let's just have a look at what we've been talking about before, Stephen Duckett, and that's the idea that you can get people together and they can knock out a better deal from a health fund. Does that mean that there is some money being made, especially now that we've seen two funds list on the stock exchange? I mean, if Medibank and Bupa are listing on the stock exchange, they're businesses, aren't they?
Well, Medibank, Bupa is not on the stock exchange. NIB is the other one that's on the stock
NIB,
exchange.
Right.
Yeah, and those two funds happen to be at the high end of the increases. So the average increase that was announced is about 6.2%. Medibank Private is going up 6.6%, and NIB going up 6.55%. So they're going up above the average across all funds. For whatever reason. I mean, I don't know how Medibank Private, maybe it is because they need to pay a dividend, or maybe Medibank Private has traditionally been a more expensive fund anyway. So yes, shopping around really can make a difference. And in addition to the switch sort of idea, there's a website where you can actually quite easily compare your health insurance options. So it's called privatehealth.gov.au, and it's done by the government, the Private Health Insurance Ombudsman, and you just put in a number of options about, do you want just hospital cover or do you want extras as well, and how many people in your family and so on, and it comes out with the options, and there are huge variations, 100% variation in the monthly premium for top sort of cover, and 20% variation in premiums for the most basic cover. So there are big differences that you can get get hold of if you shop around.
Okay, and that was privatehealth.gov.au. Yeah,
privatehealth.gov.au. It's run by the Private Health Insurance Ombudsman, who's a government body.
And Dr. Stephen Duckett, you seem to be implying that because we're getting better and more technological in terms of our procedures in hospitals and more of us are living longer, that we're just going to have to live with this, that every year we'll see a 6% increase on average, by the sounds of it.
I don't think I'd go that far, but we're certainly going to have to look at how we actually moderate cost growth, and part of that is going to be, tightening up on what we pay hospitals for care, and there's a huge variation in efficiency between hospitals. Part of it is going to be a bit more tighter on, what operations are done, is every operation that's done necessary, and all those sorts of things.
And this is what's just been going on in South Australia at the moment. They've just had a major review of the health system. So you think that there is room for improvement?
Absolutely room for improvement. We did some work just looking at public hospital variation in costs, and we said there's about $1 billion that could be saved if we tightened up on inefficiencies in public hospitals. And I'm quite sure there's the same variation in private hospitals as well.
All right. We're talking to Dr. Stephen Duckett, former Secretary of the Health Department, now Health Program Director at the Grattan Institute. We're going to take some calls in a moment. You're listening to the morning program. It's just gone 9:25.
Matthew Abraham and David Bevan.
Well, right. It is laughable. So do you think there's just a very good chance here that you've been stitched up, that this is a fake?
Don't miss breakfast.
Whoever said this, whether it's a hoax or not, probably needs to be behind bars or needs help.
Weekdays from 6.
Senator Jackie Lambie, did you publicise this letter or did it leak out somehow?
No, we publicised that.
Why did you do that if it's a death threat? Normally, all sorts of public people get death threats and they're not released publicly.
891
ABC Adelaide.
This is Mornings. Mornings with Ian Henschke. 891.
Online and on mobile.
And we're talking to Dr. Stephen Duckett and also Joel Gibson, Campaign Director of One Big Switch. Joel Gibson, one of our listeners said that they got an offer from a new fund that was out there and it was a lot cheaper than their old fund. So they went back to their old fund and then the old fund offered them a lower rate. So it sounds as if you don't have to have 40,000 people behind you. You can actually get a better deal even if you just try them on.
There are lots of different ways to save, Ian, and we actually say that as a result of these campaigns, just as many people save by doing that sort of thing as save by switching to the winning offer. So it's about unlocking an offer which becomes a benchmark, a jumping off point for people, and then how they use it is entirely up to them, and we love to see people save, in that way as well.
All right. Lots of calls now. Raylene from Victor. Hello, Raylene.
Oh, hello, Ian. In 2000, when the government was going to help us pay some of our costing factor for the private health fund, we had dipped out years ago because we couldn't afford it, and we decided that we'd go back into it. And I spent, I don't know how many days, with foolscap paper for each of the funds and ringing them all up and writing down all of what they covered and for how much, and so that my husband and I could go through it together, because it wasn't what you were going to pay, it was for what you were going to be covered for was the important factor. Some of them don't cover for some of the heart problems, some of the cancer problems, some of them only pay for certain hospitals, and we went into the Racobites, the IOR, that's who we were with because they seemed to cover for a much better coverage. And then a few years back, HCF took them over.
All right.
And they are doing extremely well with their cover for what they cover.
All right.
When we go to sort out our glasses, our teeth, our eyes, our physio, they all comment, gee, your fund is really good for how much they pay.
All right, Raylene, you make a good point that you've got to check out what's on offer. Mike of Dulwich. Hello, Mike.
Good Ian. Surely one of the problems is the private health funds are funding all of the non-evidence-based procedures like chiropractic, osteopathy, homeopathy, all the quackery areas where you don't have any real medical evidence. If you took those out, you'd surely see a premium drop.
Interesting point. Let's go back to Stephen Duckett on that one. Dr. Stephen Duckett, former Secretary of the Health Department, now with the Grattan Institute. What's your reaction to that? Private health funds paying out on quackery?
Well, there's certainly a broad range of things they pay out on. The vast bulk of what they pay out on, though, the biggest single item is dental. The second biggest one, I think, is physio. So those things, you know, there are...
But what about Mike's point that they're paying out on things that have no evidence base for them and they're supposed to be health funds?
Yeah, that's right, and I think that is a big issue, and I think the government needs to tighten up on that and say to the funds, you know, you don't have to pay out on that, and the funds themselves should be taking the action on that as well.
So you think the government should tighten up on that?
Well, the government has got a sort of a working party that's going on at the moment.
Looking at it.
Yeah, that's looking at it, and I think it needs to move up.
Right.
It needs to move faster.
All right. Kevin of Hallett Cove. Hello, Kevin.
Hello. I've got a radical scenario. Because of the amount of money that Australians are paying into private health care, we scrap private health care altogether, and we put I think we're paying, 2.5% Medicare levy at the moment. Mm-hmm. We put it up to about 10%, and of course we've got to tear that off because some people can't afford to pay, so we say, righto, it starts from 30,000 or whatever, and we look after everybody properly and kick out the insurance companies, because at the moment they're costing the taxpayer anyway. First of all, we pay for private health insurance, and then our taxpayer dollars that we're paying separately, they support the private health insurers. So why don't we just have a base where all the money goes into healthcare and all Australians are treated equally, and the rich pay a bit more, the poor pay a bit less.
All right. Well, look, I get the idea, Kevin. Stephen Duckett, is that how some countries run it, or would that be too radical for Australia?
I think we've got 45%, 47% of the Australian population with health insurance, and I think it'd be really hard to move away from that at this moment. But
would it be more efficient? In other words, what we're saying is, if you've only got a certain amount of money and the health system keeps getting more and more expensive, could you get to the point where you'd say, look, let's just nationalise the whole thing?
Well, I just don't think that's going to be politically feasible. I just don't think you'd get it through the voters.
Right, and very quickly, Stephen Duckett, how would you transform health? We've just talked about the transforming health in South Australia. What would be the best way to save that $1 billion you talked about?
Well, as I said, we were looking at the public hospital system, and we said there's huge variations in the cost of inefficiency across the public hospital system. So I think that's where I'd start to look at that and to tighten up on the the real inefficiencies.
But can you name an area of inefficiency? Is it to do with?
We didn't have the names of individual hospitals, so I can't say that the Royal Adelaide is more expensive than it ought to be compared to Queen Elizabeth or whatever. But there is huge variation in efficiencies, and we identified big cost savings that could be made from that. On just going back to the previous point, about 10% of the extras payments go to things like chiropractic and natural therapies and I've just got it in front of me, hypnotherapy and things like and acupuncture. So it is big bickies, but as I said, the vast bulk, the biggest single item is dental, which is about 50% of the extras.
All right, thank you very much for your time this morning, Dr. Stephen Duckett. And finally to you, Joel Gibson, if people want to get involved in this switching, is there a website, Stephen? Oh, Joel? Yeah, sorry.
The website I mentioned was privatehealth.gov.au.
Okay, that's your website. And Joel Gibson, if people want to get involved in the Big Switch, they go to the One Big Switch website. All right. Thank you very much for your time this morning.